This week we're going to continue our discussion on student loans. Specifically, we'll be talking about refinancing our student loans and the pros and cons of doing so. I did this myself after several years of not paying attention to the interest rate that I was paying because I had government loans, so I just assumed that I'd be paying low interest, but I was wrong. I immediately started looking into this and figuring out what to do, and I found this site called Credible. So credible.com, I'll link to this below. And they're one of those sites where you enter your information and it runs you through all the different lenders, and it soft pulls your credit and shows you several different lenders that are open to helping you refinance your loan, the different rates, the pros and cons, and actually the features. I don't think they really list the cons on there, but you can see which features you like most and apply towards or for them. I would recommend applying for 3 different ones at least within a week or 2 weeks time frame, so it acts like one pull on your credit score. And definitely do this, because the first time I applied to this one that is one of those, if they refinance your loan, they will pay the education of a child in need. So I thought that was a really great feature, but unfortunately I did not qualify because I had overdrawn my bank account a couple of times. Like I said in one of my videos prior, I was just very aggressive in saving money, so I immediately move it from my checking account into my savings account, and sometimes I forget that a bill's going through, so that causes some problems. But lenders look at that, so be careful, and not all lenders look at that, right? So my second one that I applied for was through Citizens Bank, and I was able to get a 3.5% rate on my loan, so that's what I did. And to do this, you are going to have good credit, or somewhere around 700 is what they say. So if you're not there yet, then do some steps to check your score, see what's on your report, see what you can fix, because you could bring that score up potentially within a few months' time and then revisit refinancing. So just take a look and see where you are. But this could be a really good option. There are some things to be aware of though when you do consider refinancing, because if you're going from government loans to private loans, you're gonna potentially lose some features. One of those features being the option to put your loan in deferment or forbearance, which I talked about in my last video. This is a feature that you might really need at some point, so really consider your situation and where you're at before you make the jump to refinancing. And some lenders do offer this if you have economic hardship. So again, look at those features and see if this is something that, 1, you think you might be in that situation, or 2, you might need it in the future. That's one feature that could be given up. Another feature is with government loans, if you pass away, your debt is forgiven, and private loans, that's not the case. So take that into consideration. Also, hopefully you're not reckless, but it may be worth spending a little bit more in interest to keep some of the features that the government loans offer. Another thing that you might give up is the ability to go into income-based repayments if the need arises. If for some reason your income falls short or you just need to reduce your payment, then you might lose that feature. When you are refinancing, you have the option to pick your term. So you could do 7 years, 10 years, 15 years. During this process, you can see what payment you're comfortable making. For example, if you were to do a 15-year loan, that stretches it out for 15 years, but you could make double payments most of the time, and then from time to time, like maybe around Christmas time when you want to use some extra cash for gifts, you're not obligated to make that extra payment. So kind of think of things like that and ways that you could improve your financial situation without hindering your ability to get out of debt and to pay off your loan. Once you are approved for the loan, the new lender will send the payment to the government loans or whoever it is that you have your loans through. It'll pay them off, and then you'll start making payments to the new lender. So just make sure you stay on top of your payments through this whole process, because you don't want to miss a payment or skip something in the meantime and hurt your credit. Look at all your options, and I think the main thing to do here is just really being aware. What are you paying now? What could you be paying? And all that extra money in interest that you're saving it's just gonna end up in your bank account and go towards your lifestyle later. So that's your money, you work hard for it, so do what you can to protect it. Keep it safe, pay as little as you can, and just stay on top of those payments. Make sure you give this video a thumbs up if you like it, and leave some comments below on if this is helpful, if you have any other student loan questions or any other financial questions, because I will be talking about investing in the stock market soon. I've got one more video on student loans, and that's gonna be if you should invest the money or pay off your student loans, or put more money towards your student loans, or put that extra money in the stock market, what that looks like, and we'll just talk about that. So make sure you subscribe so you can see that video and other videos that I've done in the past. Thanks for tuning in. Have a great day.